All right, what's happening, everybody? Happy Monday. Welcome to the weekly investment draft. This is episode 3, I believe. Joined by Tyson Clayton. My name is Chris Pulver, and welcome to the session today. Happy Monday, everybody. Tyson, it is, to say the least, a very interesting day in the markets. I think that is a sure thing.
It is. It's one of those days. I like these days because here's the deal, especially in the stock market. Unless this time is different than it's been in the last 150 years, markets go up.
Mm-hmm.
However, we want to use this as, I love using weakness as opportunities to buy more high quality stuff, but I also don't know if we want to get too quick to buy high quality stuff.
Yes.
So I'm in a scenario where I'm excited about this drop because there's some stuff that's becoming on sale and that I'm excited about. But it's kind of the balancing act of, do I start getting in more aggressively now or do I wait for lower prices? It's kind of a conversation we're going to have today. But yeah, things are getting on sale. We got to figure out, are they going to go on sale even further?
Mm-hmm.
I think so.
Yep, and on that note, I mean, this is something you can go back to these sessions. You go back to the weekly investment draft. Go back to our AAA sessions. You can check out, your Facebook page, your webinars, Tyson, my trading room. All of this has been talked about and planned and premeditated. So the fact that we're actually getting enough to turn the market cycle into like, oh, everything's selling off. Oh my gosh, this is scary. What is this, a bear market? It's amazing how much a little bit of pain in the markets makes everybody panic. So, we had a great session this morning in our Equities on Demand trading room. And look, this is what I would expect. Now, we talked about this, Tyson. There's a couple ways that we could see this playing out. I will zoom in on my chart. And number one, what you see on the charts, everybody, this is my RightTrader system. And this is actually technically the reason why I was anticipating a sell-off. And I expect the S&P or the SPY to drop from recent highs whenever we start to break the structure. Expect it to drop down into this red dynamic support and this gray shaded zone. So price level, I'm looking for the SPY to drop back into somewhere around 410 or lower. All right, now, how do we get there? That's always the question, because we had an aggressive gap lower today. Essentially everything in the U.S. markets, U.S. indices, anywhere between 1.6 and 1.8% gap lowers, and we failed to fill that gap. So Tyson, unless we're staring at like the most amazing afternoon rally, and that's still, I suppose, is still a possibility. We fought back all last week. But if we see a fight back that looks something like this, where the market pushes up, and we have this big, long wick to the south, that would be the market's ability to fight back, but not necessarily do any damage to this bearish trajectory for right now. So as far as corrections and selling off, how far does this go? How painful does this become? Let's just talk about the levels. Okay, another stock you see here, Tyson, Microsoft. This has been one of the most overblown technical charts that I've seen in a long time. Again, I'm looking for some nice levels to start buying quality stocks at good prices, but I'm not ready to jump in right away. So it's not quite buying spree for me yet. But I would say to traders this week, pay close attention. So right now, we're looking at from high to low. Okay, now when I came into my YouTube channel this morning for my Pulver report, we were talking about a 2.96% correction from the recent highs to last week's close at the lows. And here we did gap 1+% lower. We're currently sitting with about a 5% correction from the recent highs. Now this might continue to get a little bit more painful. There's 7%. And there, Tyson, is 9.7%. So like I said, 7 to 10%, fully expect that to be a healthy correction cycle for the SPY. Now, if traders are wondering why, what are the reasons we talked about today, Tyson? China, debt ceiling, rate decisions this week. The Fed has a rate decision, Bank of England, Swiss National Bank. We've had catalysts out there running for the last, couple of months of geopolitical landscape stuff. So, again, I don't want to downplay the fundamentals, but it just is the excuse that the markets are using. So what else do you have out there that we're missing that maybe be the reasons or the reasons why, the catalysts that are really driving the markets this week?
Yeah, I think it's it's due. I think everything you said with geopolitically China, everything that's going on right now, and technically, I think the technicals. You got to remember it's sometimes the markets aren't as complicated as sometimes we make them. We run out of buyers.
Right.
Now we're never going to run out of buyers. So that's another thing that people really need to stop and think about. We have a natural multi-trillion-dollar buyer, multi-hundreds of billions of dollars of buyers coming in the markets every single year. Those two biggest culprits are corporations doing stock buybacks and employees in their 401k and pension plans having these automatic buy programs that they will have forever. And so that's the reasons why this whole adage of the market goes up. Well, it does. Why? Because we're always going to have natural buyers, but it doesn't necessarily mean that the buyers, you also have trillions of dollars that have already bought that'll eventually get to a point where they say, wow, I've got a lot of profits in place. And we have increased capital gains and corporate rate taxes that are going to actually take place now, Chris. And this is something that we've warned about for a couple of years. Now it's actually going to take place. People are going to want to start locking in some profits because if they see higher taxes next year, the year after, then they can lock in today. I'll give you an example. If let's say tax rates go up 10%, I'm not saying they're going to, but if they did, and I've got $1 million worth of profits, if I sell today, I can save myself $100,000. Now the risk is I miss a big leg higher. The reward is, well, I just saved myself a bunch of money. And there's multi-millionaires, even billionaires out there that have millions and millions and hundreds of millions of dollars worth of profits in stocks right now. And they're looking at something we got to think about. So I think it's just, listen, we're due, fundamentally speaking, we're due. With that being said, I still think we've got to use this weakness as opportunities to buy because until there's an alternative, Chris, where else are we going to put money? So the conversation I want to have is, okay, if the S&P pushes down to 400, which I think there's a gap sitting there. So I think 400 is a very, very key level. So we push down another 7 to 10%. What is on our watch list? I'm going to give you guys, my favorite three speculation stocks. And I'm going to give you what I think is a safer play for when the market moves down. So what I would do, Chris, is this. Let's say I'm in cash. I have a big cash position, which I have a pretty sizable cash position right now.
Same.
But if price flushes down to 400, a low tide's going to sink all ships. My speculation stocks, my top speculation stocks that I want to buy, and I don't know, they might be at, by the time the market gets down there, these stocks could be cut in half because they're way more volatile. These stocks could be higher because they've already been, beat up a lot. I don't know where they're going to be, but I do know this. When the market hits a low, these are the three that I want to buy. Okay. My three favorite that I think are very speculative, but also safer speculation, which is Skills, SKLZ, real company generating real revenue in a real growth environment. It's think of mobile gaming. They also have I was thinking it was going to be this year. I was wrong. They have a partnership with the NFL. They're launching their NFL game in 2022, which is, I think this is a hold through the 2023 first quarter. And I think you're jumping for joy because the thing is just going to crush it by that point. Anyway, Skills, Body, BODY, a lot of stuff happening. Been beat up. It's got a little bit of a bid into last week, which was good. Still on my favorite speculation list. Real company generating $1 billion worth of revenue. Real company, and then Fisker, FSR. Fisker is probably the biggest speculation on this list because technically speaking, it generates zero revenue right now. However, the reason I like it is because some of the partnerships it has, and I think it's going to be able to overcome some of these supply issues with some of its partnerships. So those are my three favorite speculation stocks. And then there's also a little bit of a play off of Fisker in one of my safer stocks. And this is a future play also I would say it's safe to say that the electronic vehicle movement is real and not going to go away. Whether you like it, don't like it, whatever it might be, it's here and it's not going to go away. One of the leaders in that it's kind of a covert play. It's called Magna International. It's one of the largest automotive platform builders in the world. MGA is the ticker symbol.
MGA, okay.
They develop the cars. They don't stamp their name on it, but some of the Volkswagens you're driving, some of the Jaguars you're driving, some of the Audis and stuff like that, they have a partnership with Fisker. Magna is actually the one that manufactures those, and then they these companies slap their name on them. So Magna is they're a manufacturing plant for the automotive industry, and they're specializing in electronic vehicles. The balance sheet right now, Chris, is phenomenal. It holds very little debt. It's trading at a price to sales of 0.59. It generates almost $40 billion of revenue, and it's only trading at a $23 billion valuation. It has a 2.2% dividend yield, and it's not a new stock. This is
right. A lot of history on this one.
A lot of history.
Yep.
I love this stock fundamentally. I think it is a safer place to start hiding out, and actually a safer place to start establishing this is one of those, I think this is a 10 to 15 year play, could be almost a sock away stock that has massive growth potential in it. And it's kind of a covert under the radar EV type of play. So MGA is one of my safer plays. And then I have those 3 speculation plays.
Very nice.
That's where I'm going to start to look to buy. When the S&P 500 goes down to that 400 level, those are going to be my top 4 targeted stocks.
Very nice. I know that we also have some fintech plays with Rocket and SoFi. We talk about those quite a bit.
I would put those in the same category for sure.
Safer. Yeah.
Yep.
RKT and SoFi. And then I still have my infrastructure plays. But what's going to be I'm not necessarily worried about this, but there could be some troubled waters ahead on just not getting this passed. We have a debt ceiling debate. So essentially, we need to have Republicans and Democrats get along this week to suspend the debt ceiling. It's been an ongoing issue for the last 12 years. I mean, I've been trading Forex for the last 13 years. I know that this is something like, the dollar, the debt ceiling. It was raised, I think during the Trump administration, it was raised 3 times. So it's either suspended, like as in we allow the spending to go through, or we raise the debt ceiling. And this is always something that, unfortunately, we become so polarized with these 2 parties that it becomes a political play. It's weaponized. It's, we're not going to sign it. We're not going to do it. That's the threat. And then the 11th hour, it's like, look, you can either shut down the government and create just all this uncertainty and chaos from internally, or you can figure out what the hell you're supposed to do when you're representing the people, right? So anyway, I still am thinking something's going to get done this week. It might be ugly, it might be noisy, but between the Fed rate decision, the 11th hour, some type of, either suspend the debt ceiling or raise the debt ceiling, we'll find out. But it's going to get ugly. It always is. It has been for the last, forever. I mean, easily the last 5 years has been probably the ugliest politics we've seen in a long time. But I still like some of these infrastructure plays. Alcoa has been treating me really well. CLF X has treated me really well, and I also got into one GGB, and I'm gonna keep it at that. GGB is a Brazilian steel company. The other ones are all U.S. based, but let's take this out. I'll stick with these 3 for right now. These have been ones that you've seen me talk about a lot in Equities on Demand, and Alcoa has been honestly one of the most bullish, volatile stocks that I've traded in a long, long time. I've been focused on nothing but credit spreads and buying dips, and I just actually. In literally 3 days, I told you this morning, in 3 days, I lowered my entire cost by 42 cents in Alcoa with a 3-day covered call. Like, that's how much premium this company was paying out with the recent rallies we've seen. So I was able to lower my cost last week within 3 days to the Friday expiration. I went out and did a covered call at the new highs. And still, if I get it called away, I'm basically making money at new highs in Alcoa. CLF and X gapped aggressively lower to start trading today, and I got right in on some credit spreads with a couple of small levels. We know that CLF and X may dip a little bit more, and I'm ready for that. But I've been trading these enough for the last 6 to 8 months that my cost is actually down pretty low. So I'm sitting on profit. It's just a matter of weathering the storm here, get these kind of value plays to work themselves out, find a stable base, and then work it back up towards higher highs and hopefully increase my overall profits in the next maybe 3 months or so on these and have some big profits ahead. So these are some really great stock positions if anybody's interested. Like Tyson said, speculation plays, high growth potential. We have a ton of these that are in our Equities on Demand portfolio right now. We also are talking quite a bit about, we're trying to balance this entire market because we are in bear call spreads right now on the SPY, Tyson. We're in bear call spreads on the Qs. Those are working out really nicely. And I did make the note this morning, if anybody is in those bear call spreads with us, we're essentially looking at anything like 90+% of that profit target. We're going to go ahead and start protecting it because at that time, we'll start getting towards, profit, or we'll start getting towards levels that we want to buy, right? We want to buy things we like on sale. And so that would also bring us back into stocks like Apple and Microsoft and all these crazy tech stocks that have essentially taken over the world. And, the Qs are making the S&P 500 move very much in a similar fashion. So here is Apple. Same thing. Look at this bar count, Tyson. Apple bar count. Last time we touched the shaded zone, we're talking about 367 bars on a daily chart. Apple could certainly drop back down into 135, anything lower like 120. You know as well as I do that there are This is no joke, Tyson. Did you know that Warren Buffett, like Berkshire Hathaway Holdings, it's like 20% of their portfolio is like Apple stock?
Yeah.
Is that ridiculous? It's like Ray Dalio and Bridgewater, like 15% is just like U.S. indices. It's like, I mean, you're talking about the deepest pockets in the world are just, they're buying the same stuff that a retail trader can buy, and just at much, much bigger levels. But it's like, if you think that all of them are the brightest minds in the world, it's like they're just doing the same stuff that we can do. They just have a lot more money to do it with. So,
well, and actually they're doing it maybe even the brilliance of what Warren Buffett as an example.
Sure.
Warren Buffett's brilliance is in his simplicity.
Absolutely.
Right?
Yep.
That's where he gets really, he doesn't have to, like, sometimes we try to get, and I do this all the time. We try to get cute and smart.
Yep.
And,
Timing
think
everything
outside the box and
Yep.
all this kind of stuff. And Warren Buffett's like, hey, listen, things need chipped.
Yep.
I like the taste of sugar water.
Yep.
Keep it simple,
Yeah.
and he's done absolutely brilliantly by doing that. He was late into the party into Apple though.
For sure. He was.
He
Yep.
avoided technology for a while, but you know what? Hey, listen, I love somebody. One of the things I can't stand is somebody who's unwilling to admit they're wrong.
Yep.
So I give it to Warren Buffett saying, hey, listen, I'm wrong. I was wrong. I missed it. And that doesn't mean that I'm going to stop missing it.
Mhm.
I'm going to get in right now. And so I give him credit for, realizing he missed it and getting in. So
Yeah.
he's done awesome.
And same thing even last year when he was dumping airline stocks. I mean, he was taking a lot of heat and a lot of criticism for dumping airline stocks, but it's like there's probably more quality stuff he can put his portfolio into or put the fund into. Yeah. So anyway, everyone's wondering about, okay, Facebook, Amazon, Apple, Google, Netflix, Microsoft. Those are your big FANG stocks. If they come down to good levels, look, I'm a buyer too. I've already talked about this in Equities on Man. There are levels I certainly want to buy at. So again, keep your eyes on them, but it's so nice. It's finally nice to see that these technicals, a much needed correction that we've been waiting for, is finally starting to take place. I think there's more red ahead. I'm not going to say pain, because if you know what you're doing, it's not that painful when you can buy things on sale. It's not that painful when you're buying high quality stocks at a discount. It's not that painful when you're actually in bearish positions and making profits. So another thing that we are looking for is something like the volatility index. Okay, this is the VIXI up today. Tyson, I'm only a couple dollars off my break even, man. I'm so happy to see this. This is about time. It's like I've got a break even on this around $28. And
you can get that. You can get that by the open tomorrow.
Oh, I mean, we could have a gap to $35, $40, and if that's the case, like, I might just take it and run. I'll be up a few $1,000. It's worth hanging on to. I've been sitting on this for a couple of months. It would make me super happy. If somehow it even squeezes higher and becomes even more crazy, like it was during COVID's little crash last year for 3-4 weeks. I mean, let's see how high we can go. But again, I'm not trying to be greedy. Most likely what I'll try to do is during intraday trading is I'll start activating trailing stop losses and probably give it like maybe a 5 to 10% really tight trailing stop loss. Otherwise, during normal market hours, I'll probably just protect. Especially if I'm up, 80, 90, 100% of my position. Why would I hang on to it, without having some type of trailing stop loss in to protect? So, all right. Great stuff on the stocks. I know that chart alarms this morning for me, I did this in my Pulver report. I had probably 10 chart alarms on cryptos at lows. So I'm just curious. I mean, I don't think it really changes the conversation you and I've had several times on cryptos right now. But Bitcoin, we're sitting here. Let me go to the daily chart here. We had some chart alarms activate off of recent lows. I had my chart alarm around 42,600 activate. We're seeing some wick lows right now, but I still think there's more to the downside that is coming. I would not be surprised if we fall back into this area, maybe even fall back a little bit more with some type of corrections. Tyson, do you think that we can see 30,000 again on Bitcoin? Do you think that we'll actually make a fresh low and really, kind of give everyone a big old turd sandwich out there, making Bitcoin drop to 20 before the market gets excited about another bull rally? What do you think?
Yeah, I think that the buyers at 30 were real.
Yep.
Right now we're going to talk a little bit of crypto in the 4 p.m. Client webinar also.
Okay.
But the $30,000 level is interesting because technically speaking, the mining break even right now is right around 20 to 24,000 depending on your energy cost. I would say all in it's probably an average of about 20, let's say 22,000.
Yep.
And so it's obviously ratcheting higher and higher because difficulty of mining. But what that doesn't account for though, Chris, that's not assuming. So there's hard costs that are not built into that. That's just to mine. That's
Yep.
after I've bought my machines and all this kind of stuff. That doesn't include, that's just the ongoing energy cost to mine. It doesn't include the computing power cost. What does it cost to actually buy those chips and those computers? And then the cooling costs. So you can most likely add another 20 to 30% cost on top of the raw cost. So that gets you to right around that $30,000 level. So, I've been saying 15 to 20,000 for a while. Mining costs have actually started to ratchet up pretty aggressively, which tells me there's some decent miners coming back in. I'm going to move my target back up when we start to hit 30,000, Chris. I'm going to be a buyer there, and I'm going to be an aggressive buyer at 25.
Okay.
I think we are starting. If we get to 30,000, I do think we will hit 30,000 again. That is go to sleep, sit on it, and potentially build generational wealth level, in my opinion.
Absolutely. And and just to play off that level, I mean, even if let's say this is the first time anybody's gotten into Bitcoin at 30,000. If that rallies to the recent highs, that's 112% gain. If we go into, I think a very real number that everyone will be interested in seeing from speculation will be 75 to 100K. Tyson, we've talked about before, if it blows off these highs at 65, we could go to 125, 150 pretty fast. Yeah. And so again, I mean, let's hypothetically throw it out there. Let's say we go to 125 off of $30,000. And again, this is just one coin. This is like kind of the parent one, the gold standard, if you will. Bitcoin goes to 125. You're looking at a 300+% rally. You take that across, maybe the entire world of cryptos, take your majors, take your, high market cap, high dollar amount cryptos. And I mean, just say on average, this is ridiculous to even talk about this, but on average, if you have your crypto return, one coin is a 300% return. And you have, let's say you have a portfolio of 5 coins. That's a lot of money, man. That's a 10, 15x return over maybe the course of a year or two. Yeah. So it's just crazy. But in a good way, because that's why there is, all this interest in cryptos. That's why there's interest in NFTs. That's why there's interest in speculation for money to go somewhere outside of these kind of traditional vehicles. Like, look, we've had an amazing 13-year bull market. It's still not done. There's still forced buying. There's still accommodative monetary policy. There's still everyone in there, and it's trying to keep the stability of the markets. But at some point, you run out of buyers. At some point, having an overstretched post-COVID crash, we've now gone a year and a half just extending, melt up. This is the stuff that needs to happen. From a technical standpoint, this is what needs to happen, and it finally is. So this is a good thing. This actually, I know that most traders don't get excited about this because they don't know how to position themselves, but you and I are actually ready for this. We've been ready for this, and now we go shopping, right? It goes a little bit lower. We get to the levels we want. We go shopping. We buy in the cheap. And honestly, like, we get through this stuff, Tyson, within the next probably 6 to 12 months. You and I are both talking about new balances, new highs, new watermarks, and new profits that can pour in pretty quickly. So That's all good stuff. Yep. So watch volatility today, though. I'm going to keep setting these chart alarms, man. I want to know where the hell this thing is. This is the VIX 2809. I'm just going to set a chart alarm. Got another one here set at 29. Got another one here at 31. Another one. It's like, get to that yearly pivot for me at $40. And from there, let's see if you can drag the VIXY to the upside. And from there, let's see if you can drag the VXX to the upside. So I like it. Let's get these big old pops here on volatility.
Last thing on crypto, though, real quick.
Yeah, sure.
GBTC, it is Grayscale's trust on Bitcoin, and I'm not going to go into a lot of details right now, but essentially this should trade at, think of this as a 1/1000th of a Bitcoin. With a little bit it should have a little bit of a spread higher because there's a management fee. So for where it's trading right now, Bitcoin technically should be at 30, just on 1/1000 should be at 34,370, right? But there should be about a 10 to 15% spread higher on GBTC because there's a management fee that's built into it. It's like a 2% management fee on an annual basis. So that's built into it. So it should be slightly higher. My point is this. The current value of GBTC is trading for an equivalent Bitcoin value of 30,000 right now, Chris. If you buy it at 34.55, it's like buying Bitcoin at 30,000.
Yep.
But the way that GBTC, and eventually it's going to go back into trading like it should. It hasn't traded like it should for a while. It kind of went there a little bit, but it hasn't for a while. When it does, now again, so GBTC fair value as of right now of Bitcoin where it's at is $50. So it's trading way under fair value.
Right.
So if a trader out there, you want to do what's called a pairs hedge, here's what you could do. Now, I'm not recommending this, but here's what you could do. You could actually short Bitcoin and buy GBTC. And I believe you have a brilliant, very risk less type of trade, but I'm not going to recommend that. What I would rather do, because I'm not a fan of shorting Bitcoin ever.
Right.
What I would rather do is just buy GBTC at $30. If you buy at $30, you're essentially buying Bitcoin equivalent at 26,000, which is basically, I would love to buy that. So I'm going to set it in order to buy GBTC at $30. I love that level if we get there.
I like it. Yeah, and we've played this a few times in EOD. We have, I mean, I was long here at an equal low. I'm trying to think, this was equal low, buy trade for profit. Bought it again at the lows again, and this yearly pivot got filled right there around $25 and took that up to that nice little pocket monthly combo. This was about a 30% gain. That's about a 40% gain. You buy this thing, like Tyson said, you know, it likes it at $30. I mean, even Tyson from 30 to 40, pretty nice returns. From 30 to 50 to 60, awesome.
Yeah,
you know,
absolutely.
Yep,
absolutely.
Good stuff.
And again, what does Bitcoin have to do to get back up to 60? Bitcoin has to go back up to be fairly valued. Bitcoin has to go to about $50,000. So do I think Bitcoin, if I buy it at 30 for this to go up to 50 or 60, do I think Bitcoin can go back up to 50,000? Absolutely.
Yep.
I think I've got a, you know, kind of a 1 year forecast, Chris, of Bitcoin, you know, like 125. So yes, I think we can. I don't know if we're going to get, so let me kind of say this. I don't think the rally is going to come in the next week or 2 or 3 or 4, but when the rally starts, you better hope you're on the bus. Well,
yeah, I mean, same thing here. It's like we build these bases in cryptos for years. I mean, it was the 2008, you know, it's 2017-18 high took all the way to 2020 to base, right? I mean, this is our base here in 2020, March 2020, after, you know, a long-awaited correction. All this from the previous 20K high took multiple years to make new highs. You know, again, it blows off those tops, and so what will be really interesting to see is how we base again. You know, we have this explosive trend, and you're so happy you're part of it, and then you're like, okay, now what? I think this made everybody grow very impatient because all of a sudden cryptos became very mainstream, right? So everyone wants to jump in, and you know that there were people that, you know, put in an line of credit on or a home equity line, and they're like, I'm going into Bitcoin at $60,000. It's going to 100, and now they're sitting here like hoping that it all works out. But again, it might take years. It might take years to base. But what's going to be pretty exciting is to see if we make new highs, how much more exponential it gets. And if you're along for that ride, again, you're talking, you know, 5x returns, 10x returns, numbers that are just astronomical for just the stock market returns in general. But they literally are like once in a generation type opportunities. So again, pure speculation, know the risk. There's tons of volatility, and they can go to zero. I'm just saying, like that's not obscene. And I know that I've mentally made peace with the fact that if I lose everything I have in cryptos, which won't be the case because I've taken profits along the way the last couple of years, but I am willing to let that fund essentially go to zero. But there is a point, Tyson, where I will not let it go to zero at all. And that would be once I turn, you know, my initial crypto stuff into 7 figures or more. That money's staying with me forever, for sure.
Exactly.
You know,
yep, I agree.
And trade the more traditional assets and learn how to trade for a living. Trade, you know, I'm not going to say safe and stable because obviously there's volatility in stocks in the stock market as well. But trade Forex, trade stocks, trade options, and use that capital more so than just crazy amounts of speculation and, you know, 65 to 85% corrections and dips and volatility. Anyway, we've got a few more minutes here today. What's your thoughts this week on Forex? Because we are clearly seeing a lot of risk-off trading in the stock market, and you can see this translated nicely into pure risk-off trading in Forex. So here's your Swiss franc and the Japanese yen, very strong today. We've had some decent recoveries off the lows from the CAD, decent dips from the highs, but we're retesting those highs and lows on the yen, the Swiss. I told traders this early in my session today in the Pulver report. I'm like, look, I'm looking for JPY strength, look for bear flags. I'm looking for Swiss franc, bear flags. I'm looking for dollar. Dollar's actually surprisingly baseline today after pushing hard last week. I think it's going to be a pretty aggressive play against risk on pairs. So I want to see your thoughts. Do you like Aussie yen short? Do you like CAD yen short? Do you like New Zealand yen short? Are you looking to follow those longer? Do you have another pair that's kind of on the peripheral that I'm not mentioning right now that you really like? So I want to get into some Forex here for just a few minutes.
Yeah, some of my favorite trades are I like the New Zealand yen and the New Zealand Swiss short.
Okay.
Or again, I don't know how long the push down is going to last,
Yep.
but these are some of my favorite plays. The New Zealand yen, I'd be looking for at least a few day push, probably towards that 75, 74 level. If we break there, then we can absolutely go down to the levels that you've got
Yep.
marked there.
Yep.
It's going to be difficult for us to break through. I think that 75 level, Chris, is going to provide some. That's going to be a battle to bust through there. So, but I would, if I'm in a position, one of my bigger trades right now is New Zealand Swiss, and it looks very similar to the New Zealand yen.
Yep.
And if I'm in a position, I'm going to stay in it. But I'm not gonna think we can push much lower than this, much lower than that level right there.
Yep.
That's about where I would be looking to get out and say, okay, we're done. Could we go lower than that? Absolutely, we could. But I think if you're thinking we're going to get lower than that, yeah. And I don't know how quick it's going to happen either. So we flush down, we kind of rally back up, flush down. So I'll probably lock in profits at about 64, lock in some of profits, and then I'll look for an ultimate move to 63, Chris.
Okay.
Is what I'm going to do on the New Zealand Swiss.
Nice. And it's right back here, right? It's using the same structure. Past resistance became support, really aggressive bounce. I could see us fading back down. I want to say this. I mean, after all this settles, Tyson, the correlation between stocks and Forex, we know there's risk on, risk off. You know, in the stock market, we might see this beautiful little gap from today. The market flushes down aggressively, finds those, trending or those automated trend lines I'm talking about, finds that 7, 10, 12% correction I'm talking about. And from there, we put in, maybe right away, like we have one full week of trading for September. We close out the month next week, and then it's time for October. Now, if October is a recovery month and we kick into, I mean, it's crazy how fast the year's gone, and it's even crazier how fast maybe Q4 will go by. If the market's mindset is everything's fine, we're going to get through it, accommodative monetary policy, Fed's not going to disrupt the markets, geopolitically we'll tolerate things, whatever. Q4 rallies are not out of the question, and historically speaking, December's been the most bullish month ever in the history of the S&P 500. But it all kind of starts getting that way by end of October. November is all of a sudden just kind of coined as holiday trading, and that holiday drift and Santa Claus rally pretty much take us through most of Q4. So unless we just completely, crap the bed for the rest of the year, I think this market is anxious to buy at really exciting levels. And so, it's really cool that you're talking about New Zealand, Swiss, New Zealand again, coming down to revisit these levels, because part of me thinks this. I think we could have just a lot of volatility. I think that this can make its way back down, find these lows. But I think if we have a risk-on rally coming back in the stock market, this goes right back up to where we started.
I agree.
And so we have this high and we have this support, which is past resistance, and we revisit this. So, I like selling right now with bear flags. I think that's probably the play this week, as the stock market might continue to show red and pain. But once we get down to these nice levels, I am very interested in, again, this is kind of how I trade on some of my positions, is I look to kind of invest in some of these currencies. So I'd be willing to invest from like 6,300 down to say 6,000 and plan on building a position back up towards 6,750. So I would do the same thing on New Zealand Swiss and New Zealand yen. I do it on Aussie Swiss, Aussie yen as well. And so that's what I will definitely be talking about that this week in my Flex trading room. Levels I'm interested in. Right now I'd say, don't fight this flow. Don't start buying into this, crazy risk-off trading, because it might be costly. It might be painful. So just be patient. But if you're interested in buying, buy at great levels. If you're interested in selling, that's probably the direction we want to focus on this week. And have a stop loss, have a plan, put a trending system on there, go for smaller time frames, and go after these little jabs. Just like we've done in stocks, we're taking these little pokes and little jabs in the market. And right now, if that flush is risk off, let's take jabs of those risk off trades. So are those your favorites, Tyson? You got Aussie?
Yeah, those are my favorites. And
okay.
I agree with you on the buy side down in those levels.
Yeah.
Not here. I'm going to look to take some shots on the downside. Once we get down, like New Zealand Swiss, once we get down to that 63 level, I'll be done selling, and I'll probably be much like what you just said. I'll probably look to flip it around and start buying.
Yeah, I like this pocket right here too, right there at the middle. Beautiful spot of demand, right?
I agree.
Demand pocket, good stuff. Okay, awesome. I'm going to take a look at the Aussie New Zealand, which is at 103.09. All I'm going to tell traders is this. if we break this trend line, okay, it's right here. I'm just looking for a pretty clean trend line break to go from inner to outer trend line. All right, now, could it come down lower than that? Sure. I'm not discounting the fact that we might go a little bit lower, but we are kind of stuck between some major patterns. We have this high that was taken out over here. And so one could argue that we have this really nice bull crown. But then we could also argue that we have this left tip, this center tip. We have a bear crown right here that is now right tip is formed and did sell off. And we have head and shoulders. We have all sorts of patterns that have been pushing this trend recently to the downside. All I'm saying is this. If we're stuck between this pattern that suggests a bullish move, so right here, if this is suggesting a bullish move, okay, and this is suggesting a bearish move, guess what? I think that none of this is necessarily disrupted. I think that we could fall into this level, break the right side of this trend line, and then make our way back up to this outer trend line, possibly even, Tyson, make our way back up to this high at 110. And so I think, again, for me, it's at 103. I'm closer to 100, 1.00. I'm closer there now than I am if I'm trying to sell it up here in the middle. So in my opinion, I'm looking for some clean, bullish confirmation to start buying Aussie New Zealand and take it back into this past support resistance around 106.50, 107. I'm also interested to see, like, maybe this gravitates back up towards 109, 110. I don't know. I mean, if it's a clean trend line break, it's going to be something I talk about with traders, looking for bullishness, looking for opportunities to buy low, look for confirmation, and then trade it back up to, past resistance and support, nice little pockets. And, you and I have talked about this fair market value on this one. 107 to 108 seems to be this really consistent range on the Aussie and New Zealand. So just food for thought on that one.
Great. And I was actually talking about this in my money flow session today too, where in this environment, here's kind of two currency pairs that you could kind of look at. Aussie New Zealand's the best of them.
Yeah.
But it's correlated currency pairs. Like, hey, are we going to sell off? Are we going to rally? What's going to happen?
Right.
Well, you trade the technicals, you buy low, you sell high on a currency like this. Then another one that you could, two others that you could look at is something like the Aussie CAD or even the Swiss yen. Swiss yen's not
but
even something like the Swiss yen. But those are correlated currency pairs that where if the market falls, you can still make money. If the market rallies, you can still make money. But I like playing those. So Aussie New Zealand, Aussie CAD, New Zealand CAD, Swiss yen, different currencies like that will keep you out of like major pain.
Major volatility is avoided for the most part.
Exactly.
Yeah.
Exactly.
Yep.
So I like it.
Very cool. Hey, let me get your thoughts really quick on the Swiss yen because I talked about this morning. I have been pretty patient waiting for this one. We made some pretty good profits on this one earlier in the year in the Flex trading room. Now that we've officially broken this level, what I would love to see here, Tyson, is I think we're coming down to 116, but here's what I'd like to see. I'd like the opportunity to sell this again at this high or this high.
Yes.
If we get a pullback, I'm looking to sell this at 120 or 121 or 122 and then take this down towards this 116 area. Man, I really hope we can get this trade because I think on the right side of the trend line, potentially a double top at the back side of the trend line, Tyson, this could be a monster trade. And again, for something like Swiss yen, correlated pairs, it's a nice way to eliminate a lot of that volatility you get on those JPY pairs sometime. And man, I would love to have this trade. So my hope is this.
1,000 pips. I think 110 could be in the cards.
Absolutely. Yep. We talked about that. Yep. So 120 down to 110 is not out of the ordinary. And if we have this, especially a double top, if we have a double top and we measure that move high to low, and then we break out, we match that brings us back into like 113. Yeah. That trajectory alone of that, kind of that acceleration could easily bring us into a nice round number like 110. So anyway, if it comes together, that's a great trade. I'm happy you're talking about those kind of correlated pairs because I tend to trade those a lot.
Yep.
Cool, man. Anyway, final thoughts. Great session today, by the way. I mean, we covered stocks, gave some great tips on speculation plays, growth plays, infrastructure plays, what we're doing in equities on demand. We brought in cryptos, GBTC, MARA. We brought in some stocks we're participating in, our outlook on cryptos, and Forex, of course. Never dull moment in these weekly investment drafts. And we're missing our third musketeer, Gary, who's, I think, is he off this week on vacation?
I think so. I think
he's off this week. Anyway, but Gary will be back hopefully next week.
What's vacation?
Yeah, no doubt, right? It's every day in the market's a vacation.
Yeah.
Yeah, right.
The closing thoughts for me is raise cash. Look for high quality. Know what you own. If you question what you own, get out of it.
Yep.
Right?
Yep, I agree.
Get out of it. I don't think raising cash right now, even if you kind of like something, but you're concerned, I don't think getting out of it is a bad idea to look to buy lower. You just have to be okay with what if you don't get out at the right time and it goes higher.
Right.
As long as you're convinced you can find some place to allocate those resources again, someplace better, then get out. So raising cash right now or keeping the cash you have to look to buy some high quality stuff, I think is the way to go.
Yep. And just remember, I want to make this really clear because I know that you can kind of sense it out there, especially with Tyson, myself, and even Gary. We run trading rooms. We talk to thousands of traders every single week. It's stuff like this where when you look at the headlines and everything is bearish and everything's red and the sky is falling and oh my gosh, it's chaos. All that has to happen for the stock market just to fall. It's like we've been conditioned to think like it'll never fall. It can't fall. It should and it must and it has to. Just for the sake of having a normal market cycle. We've had the best bull run I've seen in my entire career. And I mean, granted, I haven't been around since the 1920s, but it's like, we've had some amazing recoveries off of crisis. We had one in the dot-com bubble, the financial crisis, but here we are 2008-9 post, even COVID crash of last year. We've engineered these recoveries and you can't keep doing that. And so it's a cleanse, it's a correction. If you're looking at percentages, as long as we're not tapping below 20% corrections, this bull market is still healthy and we could still have some legs. We could still get back to the highs. But if we crack that 20%, we're going to have a different conversation. We're going to be talking about death crosses. We're going to talk about major structure. We're going to talk about this evaporation of all these profits and gains since the COVID crash last year. So Tyson's absolutely right. If you've got the cash, get ready to go shopping over the next couple of weeks because that's when you get some great deals on stocks you love. We've got some speculation plays. You got some safe plays. You got some infrastructure plays, things that I think in the next 6 to 12 months could be fantastic. Speculation plays, I know, Tyson, you're very bullish on all of these and give them time. 1, 2, 3, 5 years. You're talking about a lot of countries and sectors going carbon neutral by 2030, 2035. I mean, again, this is a long-term game. You give yourself time and patience and capital in these markets. That's how, wealth has been generated over the last century. So keep doing it.
Quick, one last thing. Be selective too. So I'll give you an example with money flow.
Mm-hmm.
Top trade this week is the dollar Swiss short.
Phenomenal short
trade, doing awesome.
Yep.
That's awesome. The second best trade, so I do a scoring process. The second best trade is the New Zealand yen long.
Okay.
I said, no. No way. I'm not going to touch the New Zealand yen long. I'm not going to touch. So I would normally be like, oh guys, we're gonna follow the rules and set up. No, trade the best of the best. So if you use a formula, use the formula, but then use some logic to filter even deeper. So I said, I love the dollar Swiss. I don't love the New Zealand yen. So we focused all of our attention on the new dollar Swiss, and we're making a bunch of money, which is awesome.
Yep, that's fantastic. Which to me is fantastic too, because I am looking at buy only trades on the Swiss yen, and I needed this pullback. I took profit last week. Several hundred pips, in fact, actually on the dollar Swiss. So I closed out at a nice time, took out some highs, and I'm looking to buy some dips. But I want this thing to drop back down to 92.30 or 9200 or lower. Anyway, neither here nor there. Tyson, we got to go. Great session. Everyone, if you would do us a quick favor, hit that like button for us. Thanks for being here. Spread the word. Spread this link. This is free education. Stocks, options, Forex, cryptocurrencies. Larry even said, look, I wish I could get back into MTI, but I can't. I appreciate the YouTube sessions. That's why we do this. These are gems. This is real trading. This is Tyson Clayton, Gary Fichardt, myself. We're here to help traders, and we're trading it right along with you. So anyway, that's all I have. Final words, Tyson. You're good.
Good to go.
All right.
Everyone.
See you next week, everybody. Appreciate the patronage. Come back next week on Monday, and we'll be back. Talk to you soon. Thanks. Bye.